Light FM. Rob Thomas along with Santana and the boys in the band there. We're at 8:43 now. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time to check in and find out what Wall Street is doing to us this morning. Yesterday it was for us. Looks like today it could be to us. Let's check in with Philip Statler from Statler Financial Services in downtown Sebring and see whether he's feeling good about things this morning. Good morning, Philip.
Hey, good morning, Dave. Yeah, yesterday, you got to love yesterday, man. It was barn burner day to the upside. And I think I saw a headline. You got to go back to like April or somewhere in 2025, second quarter 2025, to see this kind of increase in the indexes.
Yeah, I think the last time we saw the wild swings like that was right after, quote, Liberation Day on the tariffs. We swung way down and then everything got held up and we swung way back up again. Yesterday, the Dow ended up 1,325 points. That's 2.85%. Standard & Poor's was up 2.5%. NASDAQ up 617 points. That's 2.8%. I didn't check the Russell 2000, but I'm betting their percentages were similar, weren't they?
Yeah, they win the game. Up 2.97%, a little over $75.
Kradinsky. Well, it was all a great day yesterday, and then, well, Iran had a hissy fit over Israel continuing to bomb Hamas over in, or Hezbollah rather, up in Lebanon, and they closed down the Strait of Hormuz again. We actually had fewer tankers get through yesterday than we'd had all month on a one-day run. So, yeah, we haven't accomplished much yet. We're starting to make noise back and forth. They sent Vice President Vance over to engage in the third-party negotiations that we're having through Pakistan with the Iranians, and all of a sudden the bloom kind of came off the rose in a hurry overnight, and now when we get to the futures, you'll see we're seeing they're pointing down. I'm relieved as much as anything that we aren't looking at 1,000-point drops in the Dow. It actually looks like a relatively conservative day this morning so far.
So far it does, Dave. There's, not anything, kind of our normal ups and downs, nothing over 0.3%, except for the Russell. The Russell's getting hit a little harder this morning.
And the price of oil went right back up to the neighborhood that we don't like seeing it as well. We're not happy overall, and we're not happy necessarily with the government data dump that poured out either. Probably the biggest headline one is the gross domestic product reading. This is this is the second look at the GDP, isn't it, for the fourth quarter?
Yeah, let me see what it says. Second revision.
So we'll get one more that they'll take as being taken to the bank numbers later on. But fourth quarter gross domestic product, we were not happy with what we had when they said it was only a 0.7% increase in the output of goods and services in the country. Well, the revision came out this morning, and it was even worse, 0.5%. That's not good news overall, is it?
No, it's really not, Dave. I mean, we want our GDP number to be somewhere in the 2.5% number, just kind of on a normal ups and downs of the marketplace and the economy. That's kind of what we shoot for, but we are way off base when we look at what the numbers came in at today, that 0.5.
Absolutely. We do need to take into consideration, though, that we were looking at another partial government shutdown during that period, and that did put a drag on the fourth quarter, but still, that is anemic growth. Now, we put it together with the Fed's preferred inflation rate, the personal consumption expenditures inflation, at the top line, 0.4% up last month, and we only had 0.3% the last time, so we're still looking at inflation being something. It needs to be said. This is, let me see. Yeah, this is Yeah, we're looking at February here, so it wasn't even during the time frame that we were throwing rocks at Iran either. The core index that gets rid of the really variable stuff, annualized, still 3% inflation, and the only good news I can draw is we were at 3.1% on the last report. But hey, 2%, that sounds like a foreign language right now, even though the Fed's saying they're trying to target it.
Yeah, let's just face it, they're not a good shot when it comes to hitting the target.
They used to use a term that I haven't heard for a little while, but I think we're going to start hearing it. The new normal. What do you think? 3%?
I'd hate to see that come into play, man. That's just a huge that would be a huge inflation number for our country.
Absolutely, because wage hikes generally do not end up matching that number, and that means we're going to be losing ground pretty much in an ongoing process. Kind of showed up as far as losing ground is concerned, too, on the personal income and expenditure numbers. We actually lost a little ground on personal income on the last report, didn't we?
We did, Dave. It went down 0.1%. It was expected to go up 0.3, and that minus 0.1% is compared to January's number where we were up 0.4%. So definitely going the wrong direction when it comes to the income.
And we aren't spending as much either. That actually fell by a little bit too. And another one of those measures, they expected a marginal gain of maybe 0.5%, and we actually went down on how much we're spending. So not only are we paying more for stuff, we're buying less of it, and that does not bode well for the economy in general. This is a consumer-driven economy.
Yeah, that's right. If people stop purchasing, then that's a direct impact on the economy, and will start to slow it down faster than we'd like to see it happen.
It's not good news overall. And then we put that together with the fact that the international situation is getting a little more upsetting. It won't take a rocket scientist to guess this may not be a green day on Wall Street. Got a bunch of tidbits out there in the process. The Federal Reserve Open Market Committee meeting minutes came out yesterday afternoon. We were so busy celebrating the impending possibility dream of peace in the Middle East that it didn't change the market a bit, but I was concerned when it said that, quote unquote, some of the governors in the minutes were advocating that they needed to examine the possibility of going both ways on interest rates. They soft pedal it so much. Some, that could mean 2, could mean 3, could mean 4 of the governors, but the fact that it was voiced by more than one kind of adds some credence to the notion, yeah, in addition to fewer interest rate decreases that we like, sounds to me like we may very well even have on the table an increase, right?
Well, I think so. And you and I have talked about this a couple of times now, especially this year, that we are just not getting to the number we need to get to. A matter of fact, the inflation number continues to rise. And granted, we're losing some jobs now, which is affecting some things. But one of the ways to kind of put a damper on inflation is by raising those interest rates. Now, I don't want to see it. Your neighbor doesn't want to see it. But when we have to stop the inflation number, that's the Fed only has so many tools, and that's one of the tools they have that they can use.
And I think it's probably one that they're going to end up starting to consider because they've been working hard to reduce their balance sheet. That is one of the other things they can do in an effort to try to take money out of the economy and out of circulation without that reference interest rate. But I don't know how far they are down toward the bottom, but that unwinding of the quantitative easing, they can't be too far away from their goal on that, can they?
I would not think so. But I've not seen any headlines or any articles lately about what that looks like.
It's kind of faded into the background. They haven't mentioned it above the level of the foxhole yet. So I hadn't heard, but every once in a while they'll mention coming out of a Fed meeting that they're reducing or increasing their quantitative easing, and they just haven't mentioned it lately, which kind of gives me the feeling that they figure the job is almost done. So it's kind of fallen off of their radar screen as far as public releases go. Other tidbits, the Anthropic people. They make Claude, the artificial intelligence chatbot. They got a new version of it out that's designed to break into computer systems.
Oh, jeez.
They're testing it now in in a very limited release, mostly just with companies looking for people to plug holes, and they figure having something do that. But that sucker gets out in the wild, and that's the kind of thing that'll make you want to go offline in a hurry, won't it?
Yeah, well, I thought maybe you were going to tell me they were going after the Department of Defense to see if they could hack in there.
They got to be tempted after they have bad relationship break they had with the Department of Defense. But nevertheless, that's out there too. And you know darn good and well when it's in, quote, limited testing, it'll be in the wild in one form or another before too terribly long. And that is a truly scary thought. How was your tidbit list doing this morning?
Hey, tidbits, we're really at the very, very top of earnings season. Not much else coming out since yesterday's Delta numbers came out. But we do have a couple things. Constellation Brands, they're getting hit a little bit this morning. They withdrew. I don't know why this is a big deal. I mean, they're really out there, but they withdrew their 2028 guidance. I mean, I don't know why they would have 2028 guidance even out there right now, but they withdrew their 2028 guidance due to uncertainty and reported subdued demand. So, so that's got them trading down, almost 0.9% this morning. Obviously, we got oil prices inching higher, like you said earlier, and that's got the oil companies all pretty much rising up about 1%. Most of them are getting that 1% or a little bit better on that fact. And of course, what's good for the oil companies, not so good for the airlines, right? And so the airlines are kind of doing the exact opposite. They're down about 1% this morning. So kind of a seesaw effect there.
Absolutely. I suspect that the airlines, probably everybody except Delta, I'm still shaking my head in awe that they own their own oil company that you mentioned yesterday. That still blows my mind. Resetting the table. Big up yesterday. International events, not such hot economic news this morning, 45 minutes before we open. What are we looking at so far?
Yeah, like we said earlier, it's red ink pretty much across the board today, except for oil. The Dow Jones is 0.3% lower. S&P 500 is down 0.25 point. The NASDAQ 100 is down 0.2%. The big loser right now is the Russell 2000, down a little over 0.6%. On the other side, we got probably the biggest loser, silver down 1.3% to $74.40 an ounce. Gold's down, no, not quite 0.2%. And then, like we said, crude oil's heading up today, almost 5.5%, $98.35 a barrel.
Not to 100 yet. There's seems to be that trip number on some computer programs. When oil tops 100, everybody sells. I'm hoping that doesn't happen. Looking across the seas, everything's pretty well red, Asian Rim and in Europe. The Asian Rim closed uniformly down this morning at the 6 a.m. close. Mainland Chinese markets off by about 0.5%. Japan was down by 0.75%. Europe is responding in real time to our futures, and they're also selling this morning, kind of like us, nowhere near as vociferous as I was afraid it was going to be given the Strait of Hormuz. But the average European index is down by a little over 0.5% halfway through their trading day. Getting my retirement together into a plan? Well, 2 days. This is a poster child. Looking at the dailies just makes no sense when it's long term. How do I find you to get my retirement stabilized?
The ups and downs we continue to see. That's why it's important that you have a plan in place. Give us a call, 863-382-0037. To schedule your time where we can talk about if you are on track, what you need to do to tweak things, or how we may be able to help you get there faster. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And at newstalk730am.com, and again here tomorrow morning about the same time on Light FM. We'll see you then, sir.
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great one. I look forward to speaking to you again tomorrow. Take care now.